Hey friends, hope you are doing well and taking great care of yourselves. Are you a trust? Are you running an educational institution or a hospital under a trust? Are you planning to file return of income for FY 22-23 of a trust and you are worried about the changes which have been made in the return of income? Then this video might be of some use to you. This video might be of some help to you. I would be preparing multiple videos because there are few changes. Of course, we may not be able to discuss all changes in the all videos, but the major changes we would be trying to cover in a different videos that I would be uploading from time to time. I assure to upload all the videos maybe in maximum 3 to 5 days time so that you would be having sufficient time to file return of income after going through the videos. Please note that this all views which I give here are my personal views. This should not be treated as a professional advice. Before I start with the changes which have been made in the income tax form, let me quickly go through the major amendments which have been made with respect to assessment of trust in the last 2 years. The first major change is that if I withdraw the funds from the corpus and apply them for the objects of the trust, it will not be treated as application. Of course, when I would be replenishing the corpus back, it would be treated as if it will be treated as if application, so it would be allowed. Meaning thereby, I have spent 100 rupees due this year. Out of 100 rupees, 40 rupees out of the corpus. So my application would be only 60 rupees. The allowed application would be only 60 rupees. 40 rupees which I withdraw from a corpus will not be allowed as application. But in the next year, I credited funds back to the corpus, 40 rupees. So in the next year, 40 rupees would be treated as my application. Second, let's say I borrowed funds from a bank or from any other entity or any other person and applied them for the objects of the trust. The funds which I borrowed and applied for the objects of the trust will not be allowed as an application in the year in which I applied them. So let's say I borrowed 200 rupees. Out of 200 rupees, I applied 80 rupees for the objects of the trust. 120 are still lying with me. 80 I applied for the objects of the trust. This 80 in this year will not be treated as application. But let's say in the next year, I repaid this 80 rupees back to my vendor. I got that money. I repaid that 80 rupees back to the borrower. To the lender. Then this 80 rupees the next year when I repaid, which was not actually allowed as application when I actually spent, this will be treated as if it is my application in the next year. The third amendment. If at all there is a deficit, the deficit will not be allowed to be carried forward. So I will lose the benefit of carry forward of deficit. And the fourth one is the application is one which has actually been spent. Meaning thereby, if my income is 100 and I have spent 120 for the objects of the trust, out of which 20 rupee, of course there's a deficit of 20 rupee and the deficit of 20 rupee is precisely attributable to what? The creditor, because my income is 100, assume that I have received 100 rupee, 100 rupees accrued to me, 100 rupees received by me, so 100 rupees is my income, no worries. I spent on the objects of the trust 120, I was having 100 rupees, so I could pay 100 rupees. 20 rupees are the creditors which are outstanding to my pay in the next year. So this 20 rupees is neither on account of corpus, it is neither on account of withdrawal from borrowing or withdrawal from corpus, it is neither on account of the past accumulation of 15%. So this 20 rupees is precisely attributable to creditors. They said that we will not treat this 20 rupees as an application because you are not actually spent. But in the next year, when you are paying to your creditors, it would be treated as if it is your application of that particular year when you are actually paying to the creditors. Right? So these are the major changes which have been made. And now we are going to discuss in the income tax return forms how these changes have been suitably incorporated. So now obviously the assessee is supposed to file the return, and now whether in the return are all these changes have been, whether the assessee has complied with all the changes or the return of income is in line with those changes which have been made by the law, that needs to be checked. Now this can be checked by two ways. Number one, I can go with the long drawn scrutiny proceedings and this can be checked. Second is that I may make some of the changes in the return whereby assessee has to put certain details, and based on those details I will be in a position to drag or check out whether those particular compliance have been made or not. Now obviously when I want to modify my return to ensure that all those changes are being taken care of, the only way is that disclosure requirement will go on. And of course, there are a few disclosure requirements. Before I go to the disclosure requirements, I would deal in this video one query which I have received from a friend, that till now or till financial year 21-22, we used to file, I mean, assessment year 21-22, because financial year 21-22 we would have filed the return for financial year 2021, right? So in assessment year 21-22, so financial year 21-22 we would have filed return for 2021. So in financial year 21-22 we were in a position to file the return of financial year 2021 of the entities whose income were unconditionally exempt. Let's say income covered under section 10 bracket 25. Now from this year, that is from financial year 22-23, that is assessment year 22-23 and the return for financial year 21-22, the return of financial year 21-22 which is going to be filed in 22-23, I am unable to file ITR 7 for those cases where income is unconditionally exempt. Friends, please note that it has been clarified by the department through the FAQs that in those cases ITR 7 is not to be filed. We have to file other ITR. To my mind, the other ITR is ITR number 5, and one has to go and file that particular ITR. This was a query I have received from a friend. In my opinion, ITR 5 is to be filed. The gentleman filed ITR 5 as well as per my talk with him, and he said that ITR 5 has been successfully uploaded. So this was the first stage. Now I would in this video quickly rush through the changes which we are going to discuss in our videos which are coming in a short while. And if you feel like some other changes which I should be discussing, please do let me know so I can also discuss those changes as well with you, right? So let me quickly take you to those particular changes which I wanted to discuss with you. The one change is with respect to Schedule D, where they are asking about the disclosure requirement to be given. Another change which I can see is in Schedule J. Here they are asking the details of the corpus, whether the corpus details of the corpus fund are to be given over here. Corpus on account of section 80G2B wala corpus, right? Or we can have the other corpus, that the details of that other corpus is required to be given, right? The opening balance, then the received amount applied during the year, right? Amount investment or deposited back. So those details. Similarly, the details are required to be given for the loans and borrowings, correct? Details of the investment, that details is required to be given. So we would have one video on this aspect. Then we have a balance sheet, and now this balance sheet would create or may create some practical difficulties in the sense that they have said that mention the details of corpus, the corpus out of the donation received for, you can say, repair work of places notified under section 80G2B, right? With the other income which has been 15% accumulated wala income, the income accumulated under section 11.2. So the problem that would come up is that if we have kept separate ledgers for all of them, there will not be a problem. But if you have not kept a separate ledger for them, certainly there are going to be problems, because we have to figure out those amount which is falling under each of the category, because this needs to be matched with the other details which we are going to file. Let's say in Schedule D or Schedule J, this needs to be met. Similarly, in the balance sheet, we can see that here the investment under section 11.5, the investment kept in the mode 11.5, and here we can see that Schedule J talk about the details of the investment to be filed in the previous year, and that numbers should ideally be matching. Thereafter, we will be discussing about Schedule ER, where there are some changes, and that changes we need to discuss. So these are the changes which we are going to discuss in our videos in a time to come. If you find that there are some other changes as well which I should cover in the next videos, do let me know. So I will be coming up with few other videos and would be discussing those changes with you. I am sure this videos will be of some benefit to you. If you really like those channels and these videos on this channel, please do subscribe to the channel so you will get notified immediately as and when those particular videos would be uploaded. I am really thankful to you for the great response that I am receiving from you. I would be more than happy and obliged if I can receive good suggestions from you as well. How can I make this content better? Thank you very much. Wishing you all a great time ahead.